From Washington, this is the Macrocast, a podcast brought to you by Penta and Markets Policy Partners.
Good morning. It's Friday the 13th. You're listening to the Macrocast, brought to you by Penta and Markets Policy Partners. I'm Bryan DeAngelis, partner here at Penta, luckily invited back for a second week in a row to host. And I'm here with Brendan Walsh, as always, of Market Policy Partners. And I want to welcome back one of our regular guests, Matt Dell Orfano of Telamonius Ventures. Matt, great to have you back on the show.
Always a pleasure. Thank you.
Actually, before we start, do you know why Friday the 13th is a bad luck day?
I don't know. Truly don't know.
It was the day that the King of France took down the Knights Templar because he was out of money. So he stole their money. So they were taken down on a Friday the 13th, and it became a historical bad luck day.
Did
Interesting.
not know that. Brendan, big week this week with the consumer price index readings. Overall, I think a pretty good report. I think people have some stuff to celebrate, but break it down for us.
Yes. So, and also I want to get Matt's insight because I know Matt has a model that breaks down all the components, but basically, I mean, it's kind of clear that inflation peaked, a few months ago. And most importantly, that we're not seeing a massive acceleration in the service sector, which is what the Fed was worried about. We're seeing actually a massive deceleration or disinflation in the goods sector. And then we also have this kind of debate. It's not a debate. It's just a reality of the way that the BLS computes the housing index. So that basically was the entire reason that core was up. So it was up 0.8%. But when you look at all the real-time data, the Zillows and the Redfins of the world, they had measured it down like 0.1, 0.2% on a monthly basis. So the Fed has an interesting dynamic where the real-time data is showing something. I mean, the official data is showing one thing, while you kind of have to take that out and maybe put in some of the real-time data. Matt, like when you look at your models and things like that, like how do you break it down? Yeah.
So I think the way I think you nailed it already. Is it rents, irrespective of whether they were up or why it was calculated, all that aside for a sec, rents were driving material increases in costs in the measurement. Also for people on the ground. Now, I would say that if you looked at the underlying stuff, X rents, and that includes goods and services, and you can cut it however you want. When supply chain started to release early summer, that started to influence pricing. When inventories came back, and potentially there was issues with spending or fear of the economy, et cetera, immediately you've seen promotions come back to goods. That kind of checks the box and says, goods prices are coming down.
Let me pause you there.
Yeah, sure.
Go back to the supply chain. So, like, I have a few data points. I know that there were ships off of Los Angeles for months, and now there's no ships off of Los Angeles. So, what are you seeing on that front? Why is the supply chain not an issue anymore?
There was over ordering in many cases, but the most important piece, in my view, was a pinch point. If you needed the same little chip that just turns a 1 into a 0 or whatever, but a very simplistic analog type chip, not fancy processors from Intel or anything like that. And that same chip, guess what? Because it's so simple and so ubiquitous, it goes into a cell phone and a charger and a monitor and a car and all these things, right? So when you have these pinch points in these one things where you have 50-cent components that are slowing down the ability for Ford to deliver a $60,000 vehicle or for Google to deliver an $800 phone.
Right. It was literally like Ford had 99.9% completed cars, but they needed this one little chip.
Sure, in certain cases, maybe it's something that goes in the famous one for the it ran out this. It was improved by the spring, but was the tire pressure monitor?
Well, that's
systems.
What it was,
right?
Yeah.
You can't ship
and
without a TPMS.
That's a federal mandate. So
correct. I think it was 2000. I'm making the date up, but 2012 or something. It said, hey, you got to have a TPMS in the cars, and it's it's implemented. So now they had these chips. I don't know. I can't imagine they cost more than 14, 15 cents a pop. right? This is not moving the needle in terms of, but it stopped entire supply chains. Great. So then you saw the clustering of when things were ready, or people over ordering or double ordering. And you also saw the inventory mix be really messed up. Be simplistic about it. If you had a lot of blouses, dress pants, and suits, and then you had to keep selling during the pandemic, you had to buy a lot of yoga pants and stretchy sweaters, right?
Right.
So, I mean, it's not that deep, right? So people had to order, they ordered a ton, they ordered at peak pricing. And then, of course, not only did that roll through on the pricing, it also made these pinch points in the supply chain. Apparel is a very interesting one because it's a historically an industry that discounts as regular course of business, right? That's the deal.
Right.
Like, hey, the Macy's sale or the whatever. It's that's nothing strange. It is what it is. That's how the business works. But these guys went a year without ever having to mark down or put anything on promotion. I mean, Sure, they marked up.
And is part of it also now the economy just shifting? We're moving back into services. The world's open.
Sure, and I think all of that started. So because let's just pick a date. Let's say all that started in January of 22, right? Clearly, that's a course of evolution for everything. Well, whatever. Well, guess what? Then you have your mix of clothes change. You have people going on vacation again, et cetera. And all of that stuff compounds. And then the supply chain frees up. And then the markdowns have to start because you can't, again, clothing's a great example because you can't sell summer clothes in the fall. So you got to move them, right? Yeah. They have a perishable. They're by nature, they're not like a banana, but they are, kind of like a banana, right? So you have to sell them. And so with that evolution, that brought, and just markdowns coming, and you don't need to have fancy alternative data. I would suggest that everyone just check their inbox for like 20% off, 40% off, 30% off, and all that started. You saw that coming back into October, and you're like, man, I haven't seen these in a year. And discount codes, that's your answer. You're done. You don't need to know anything else. So you kind of check the box on goods. Certainly, we can argue whether it was stimulus or whatever that, think about durables and everything from washing machines to speedboats, right? But we saw the whole boat, RV, recreational vehicle market collapse when the stimulus ran out. Great. So inventory is building up there. And then, of course, practically higher interest rates and lower housing turnover. We don't need to get a debate about why or where or when. That all sort of started in the spring. Right. And so you have a bunch of builders and people who are saying, geez, I'm not moving as much. I don't want to reinvest in my home. Maybe there's an economic reason. Maybe they're worried about losing their job. All those things could be true. But just practically, if we were selling 6 million-ish homes a year and now we're going back to 4 million-ish homes a year, I think 3.8 million existing home turnover was the 2008 low or whatever, right? So my point is like, great, guess what?
You also had literally everybody in America refinanced at pretty low rates because you were locked in your house and the rates were crazy low. So you did it. So that also slows down the turnover because
correct.
And if you moved during COVID,
because you're going to be borrowing at 5% rather than 2.5%.
Exactly. And so bring that forward and then say, oh, geez, people can grasp a single industry easily. Think about housing. It slows down. Sure, there's less shingles, building materials, nails, that releases supply chain. There's less washers and dryers. I mean, again, vast oversimplifications here, less washers and dryers, but guess what? That also means there's less installers and less painters and less carpenters that are working, and the demand comes off for the services, which are bringing spiked labor prices down. Construction was paying, a lot of it's off books, but if even in the BLS numbers, construction wages shot up and then they can come back down. And again, a lot of it's off books. So you have guys being paid $30, $40 an hour for labor in cash. So it's a huge cash industry. So that was spiking and pulling these weird populations of labor out of normal grocery store work, meatpacking work, dry cleaning work, right? And I know in some of the alternative indicator data we looked at, that was across, the number of women working off books construction went through the roof, right? These are not necessarily bad things for the economy.
Really, really important point because so much of what the Fed is doing is based on Volcker, which was an economy that it was in the late 70s, early 80s. So when you look at this economy, and everyone says that monetary policy works with a lag, which is somewhat true, but I think it's a little less true in some things, especially housing. I think monetary policy in some industries in our modern economy actually works immediately.
But your mortgage rate goes from 2% to 5.5% in months.
And just everyone realizing, but the banks financing these builders, all of a sudden it costs them zero $0 to swap, because when the builder borrows from them, they borrow on a fixed rate, usually, not always. The bank, of course, is funding floating rate. Just the lock swap, so the bank can hedge their book, was 0 basis points, 5 basis points. And then, in May, it went to 100 basis points. So the Fed increases in cost immediately pushed through industries like that have financing sensitivity much more quickly. And that's totally reasonable and should be expected. But again, all this drives through and brings back to the inflation
point. And then on the
point.
flip side, you have the tech sector, which had business models that were unprofitable. And they were able to survive because money was free. And you're seeing a lot of that get kind of
that's a whole nother kettle of fish, but the reality is,
but it goes back to the Fed policy actually does have an immediate impact on when you raise borrowing costs. There's certain industries in the modern economy that are immediately affected.
Absolutely. And so now we're bringing that into the services, and the funky part about that's remaining is still the rent. Services stuff is coming down. 3-month average, year over year, annual, like whatever, pick your poison. It's coming down.
Yeah. But you're an investor in real estate. So like, what are you seeing actually on the ground?
A lot of turmoil, right? As people figure out what to do with projects. Look, it's simple.
There's two types of real estate. There's commercial and then there's residential.
Right. Sure.
And you also have commercial, which is both affected by higher rates, but also by people not going back to the office.
Yes. Look, this is a very long discussion, so I'll try and boil it to 2 sentences. People have to, the folks that have projects, and this is more like in the home builder space, building homes, small developers, right? They have their biggest concern right now is I got to finish the project, move my inventory, and they're consuming working capital to finish projects and not necessarily sure they're going to get it out. Right? It's very scary. So they're working on that. That's when I say turmoil. So they're deciding to sell something, but if they sell something, they have to sell at kind of a crummy price. So it makes it hard. In the commercial space, there's spaces that remain tight. Think about warehousing, industrial, that kind of stuff. Whether they're too tight or not tight enough or whatever is sort of a nuance. And then there's places like office, which are suffering a lot. And the takeaway there is the market has yet to decide how you want to discount that, and whether or not there needs to be much further impacts to pricing, or whether we're going to sort of see some transactions at better prices. But this is the same question that you asked at the beginning of the podcast, because what's effectively happening here is you have a bunch of people that are sitting here and waiting to make a choice. And so a lot of times they're sitting there and saying, well, if the inflation's cooling off, the Fed might stop raising, so at least they'll have stability. I think when we see stability, I don't have the debate about cut or further increases. Let's say after another couple meetings, we see the market's like, oh, geez, they might stick around here for a while, whatever. I think you'll see some more commitments to financing and people trying to actually get that price discovery. So I think it's very helpful that the Fed gave this new indicator. That's a really important
point, because that's certainly what the market is pricing in. And I think that's what's going to happen. I think they'll slow to 25 in this next meeting, and then maybe they can do one more 25. But actually, I think both of those are mistakes. I think if the Fed really wants to be able to hold rates steady for a long period of time, I think they should stop raising right now and do it. But if you're the CEO or even just the owner of a small business, another 50 basis points, 75 is a big deal in terms of your decision making.
Let me ask you guys this before we get to the rates and stuff, because I wanted to tee that up. I mean, just hearing this discussion, it feels like team transitory has won, right? Is that really like Powell has kind of been saying this and then afraid to say this, but
one of the last times Matt was on, he went through all of it, and his kind of point was it actually is transitory. It's a little longer than maybe we thought.
Right. Everyone read transitory. If you read your Greg Ip this week, everyone read transitory as short, and that's not really what the Fed
but meant. It was kind of 6 to 9 months, and a lot of it had to do with supply chain, and part of it had to do with the war. But I think
energy price.
I'll let you talk, but I think a lot of it has proven to be transitory.
There are very practical reasons. I think some of the community which studies these things and has econometric models struggle to capture things that real world guys, like I'll call myself, with, alternative data, et cetera, we're looking at in the supply chain, because it's hard. You haven't modeled it before, right? So I think there was sort of the first was,
and just the nature of an econometric model is
right. They're off kilter with like, okay, we don't have enough history to evaluate it, and then you needed and industry people were standing up and saying, hey, this is actually how it's probably going to work, but it's hard to sort of make a policy based on that without your research room being able to back it up. Yep. So I think as we got through that, it moved forward. And then I look at other things that they're still grappling with. The rent, which we talked about very briefly, is a really important example.
Right. They
have said, hey, look, we think the rent is, sorry, they haven't said this explicitly, I want to be clear, but by saying, hey, we should look at numbers X rent, right? They've basically said, hey, like, we think rent is something actually,
in Powell's last speech, he actually November, at the meeting, he did show the graph with all the different measures. So he's saying like, I'm not sleeping in a cave. I'm aware that rent is coming down.
Sure, and I'll give you an example. We're looking at, and you mentioned Zillow and that kind of stuff. I like to look at those as a base, but those in no way end up leading to the inflation numbers at all. And the mixes are terrible. And you don't really know what's in them, et cetera, et cetera.
In terms of direction.
No. But what I'm saying is, like, if you're seeing year over years run, still run very, very high, low double digits in some MSAs that the Fed, or excuse me, the BLS measures, you have a real reason to say, geez, that doesn't make sense. Number one, because some are coming down. And number two, if you look at the relative data
and you see houses still on the market that were gone, that had literally 30 people lined up to pay cash for it.
Sure. But in the survey, and then we can close this topic. In the survey, the way they do it is there's a bunch of people and they ask them every 6 months, the same kind of group of people. And for now, you had to go. Everyone looks at year on year, which rather than the index, which is wrong also, right? But then you had these bunch of people renewing. It showed a big pop, and imagine a pie cut in 6 pieces, and you fill half of the first piece, or part of the first piece the first month, and a part of the first piece and the second piece the second month, and as you go around the pie, you're filling each one of those cohorts a little bit more. And so by the time you get to the 6th piece of pie, effectively almost everyone is in the new or high level. And then you start to roll off the other way. So for example, if someone right now, and there's the mix of new renters and movers and renewals and all kinds of garbage you can get into. But the reality is right now, if you have someone who's like, you know what, I really don't feel like paying an increase in rent. The landlord's like, I know I put 6 or 7, but things are slowing down. Why don't you just stay? I'm not going to give you a month free. I'm not discounting rent, but like, why don't you stay in the building to try and maintain occupancy? That's going to register as a 0 in the next survey.
Yeah.
So now you have a bunch of 12s and, a bunch of 0s. And then the next month you have a bunch of 12s, a bunch of 0s, a bunch of 2s. And it sort of starts to go down until you get and annualize those 0s, 1s, 2s, 3s again. And all of a sudden everyone's like, oh, rent's 3%. Well, sure. It never wasn't. Right. And so, right. And so that's how the math works. And so I think they're being thoughtful about separating that out, because that one is particularly sensitive. Yeah.
And Matt feels very strongly about that because we used to share an office. And one day he spent an entire morning on the phone with BLS to try to get on that. He tried to be one of the people that the BLS calls.
Yeah, it's not true. I was talking to them about the rent sample.
Please stop calling us.
But it's been very valuable information. So no.
Sir, this is a Wendy's. Yeah.
Yeah, exactly.
Let's break it there, because Matt, I want to spend some time and get your thoughts on what's happening in China too. I know you do some investments there. So let's take a quick break and then we'll come right back on the Macrocast.
Penta is the world's first comprehensive stakeholder solutions firm. We are a one-stop shop for the intelligence and strategy leaders need to assess a company's reputation and make decisions that improve their positioning. As executives in the C-suite must account for a growing set of engaged stakeholders, all with distinct, fast-changing demands, Penta provides real-time intelligence and strategy solutions. We work with clients solving complex global challenges across a variety of industries. Our clients span technology, financial services, energy, healthcare, and more. To learn more about how Penta can support your company, check out our website at pentagroup.co, our Twitter at pentagrp, or find us on LinkedIn at Penta Group.
We're back on the Macrocast. This week's guest is Matt Dell Orfano. Matt, talk to us a little bit. Brendan, you too, feel free to jump in, but some news over the last week or so out of China, and I think we'll spend the next couple Macrocasts probably spending time on China, but really reopening over the last few weeks. Lot of action coming out of there.
And not just reopening, going from completely closed to
0 to 60.
Wild.
Yep.
0, which is utterly amazing. It's
amazing.
We kind of know people that were involved in the filtering out of information in China, and they just totally botched it. It was literally the World Cup. They didn't lure out the fans, and everyone in China's like, what? Everyone gets to go to soccer games? Like what
sit in a stadium and have fun, and So Matt, what are you seeing more from the markets and investment side? What's happening over there?
Sure. Well, look, I think everyone has to be really intellectually honest. China is a big part of the global economy. It's a fact.
The second biggest economy in the world.
Yeah.
Yeah. I mean, it's real. I think there's plenty. I think a lot has changed in terms of the world's interaction with them, and huge trends of deglobalization, moving supply chain, et cetera, away from China. The reason is not important. There's some political ones and some economic ones and some productivity ones, i.e. it's, technology has allowed things to be manufactured more cheaply elsewhere. So this is an option that didn't even exist 10 years ago, right? So a lot of different reasons for that, people with, far more qualified than I will debate, but it's happening. And I think I've seen several very thoughtful evolutions of how they're allocating capital internally. And whether that was the base layers of building real estate, telecom infrastructure, I think it was very thoughtful. And this was to get people online. Everything was happening before the Beijing Olympics in 2008, right? Those are well-known things. They're well documented. And I think they were really thoughtful investments that allowed productivity for them and allowing their employees to get the wages and everything to go up. So folks were very pleased and very happy, and they should be. And I think as we've evolved and they've had to get into higher tech industries and make more innovative elements to keep their economy going, and think about stuff that we take for granted, like Microsoft Excel, right? Like that's a thing that allows us a lot of productivity, right? Windows, like operating systems, all of those elements that we just we're like, oh yeah, of course we have that. Well, they didn't have a proprietary version or a version that people were comfortable with or whatever. And so as they go through the process of building all that and customizing it, accounting systems, we have in the PBOC and IFRS and a whole bunch of IFRS and other standards that allow us to do accounting properly, right?
Yeah. Especially accounting.
These are things that they've developed over the years, that they've tuned to their own economic interest, just like we have GAAP and the rest of the world generally uses IFRS. Like these are huge evolutionary things that are adding productivity, and now sort of how do you grab that? Then we went into this lockdown, and what's interesting to me is the consumer evolution that happened, and this is Alibaba and Tencent and gaming and all the marketplaces and JD.com and big names that were ADRs that were selling tons of merchandise over there and globally. These are companies that made people in China happy.
Right.
Amazon makes people happy. Alibaba made people happy. They allowed them on economic productivity, freedom of, like, these are incredibly great things for people, right? And generally speaking, when your people are happy everywhere, it's a good thing. And so now this lockdown came, and now we have to come out of it and say, how do we actually engage and continue to increase productivity if it's not totally clear that we're going to have an export market that's going to be growing in our favor, or foreign direct investment that's going to be growing in our favor? So now they have to do that, and I think there's going to be huge levels of investment in a lot of the healthcare, technology around healthcare. And I look at some of the stuff that they're doing, with their own development. We look at the software space, et cetera. So looking at what they're doing with their own domestic operating systems, right? And building their own versions, like their open source versions of like Linux. It's an operating system we use for servers and email servers. Right. It's a common name. Linux, that's a computer thing, right? Well, they're doing, their own version of that. And then now they can unify a development platform on something they're comfortable with, right? Great. That allows incredible productivity. And I think when I think about how to invest over there, I want to be really thoughtful about maybe with the, I'll say limited, not in a diminutive way, maybe with the more constrained funding environment they have, because local taxes, property development has come off, real reasons that everyone knows about. How do you invest thoughtfully? And they're clearly spending time in the technology space. They're clearly spending time in the software space, and all of those things can be will probably add a lot of productivity. So when I think about investing over there, I'm not so sure that the China index, right, that we're all familiar with, right, the MSCI, et cetera, I'm not so sure that's necessarily the best tool for how I would want to invest in their future growth, right? Because there's a nuance to certain elements. But was it kind of bottomed out and it's the most liquid, and consumer companies are probably going to come back, and there's a bunch of consumer in that? Alibaba, JD, and the local consumer.
Right.
Yeah. So is that a reasonable place to be putting your money? Just because domestic velocity is going up? Sure.
It was literally closed like a week ago.
Yep.
But Matt, let me ask you another question, kind of taking it back home. So the CHIPS Act, we're allocating a decent amount of money to producing semiconductors here in America.
Sure.
I know a little bit about, how intensive it is to produce a semiconductor chip. Do you think we're able to do it here in America? And what does that mean for China?
I think, well, the latter part of the question, I'm not sure I know the answer to, because I know they're making a lot of investment too, right? But I think when we think the CHIPS Act is provided a lot of capital or opportunities to get capital at low cost of funding or tech, et cetera, to build a production base that we don't have. I think people often confuse, there are highly complex parts to chip development. All the design, the engineering, the material science, et cetera, the process engineering. And then there's also the simple stuff that we just hadn't done. So if I told you tomorrow I was going to pour a road and I needed concrete for that road, you could say, well, do you know how to cook the lime, and do you know what the right gravel mix and all the stuff is? And I'm like, oh yeah, except for the fact that I didn't bother to build a gravel quarry.
Yeah.
So we're at the gravel part, right? So I think I wouldn't overcomplicate
this is right? Really, really important.
Right. Like, we got to do that part, and then we're going to debate whether, okay, TSMC might build a facility, or they are, but they're, might expand, and Intel's going to do X, and GlobalFoundries is going to do Y, and all the. Okay, great, sure, fine, but let's get the gravel pit dug, right, and then let's lean on our thought leaders in the space. And when I think of thought leaders in the spaces, we're blessed in this country to have incredible science, incredible university programs, a DOE that does, just the folks there do the most thoughtful stuff in terms of how they think about the future and give engineers opportunities to explore ideas. So we're in a great spot, and you have the beauty of private industry, and it doesn't matter which of the major semiconductor folks you pick. I know Intel has been big in the space, obviously. They're spending a lot of time and sweating hard to get their processes and engineering and velocity up to meet these demands. And I'm just thankful that we have the resource.
Simple. You need a lot of water to produce a semiconductor,
Sure. Yes. Yeah. No, I do.
There's simple parts of it that I think people don't quite realize. Yeah.
Yep. All the water infrastructure that goes, and this is why, I think a lot of folks are, I do believe that the CHIPS Act was definitely a process of education. I do believe there's still a lot of cynicism around it. Without commenting on whether government involvement in private industry is something that I have no view on that part. That's out of my purview. But I will say that just that process of education and having states, regions, local offices, staffs of the politicians start to understand what this means and how powerful productivity and how exponential it is for the economy. I think that was a lot of people put a lot of work into doing that and really trying to do it the right way. And I'm thankful for all the people that have done that work, so we can get our quarries built, so we can get our mixers built, so we can build our trucks And then we can worry about like, let's get the formula right. But frankly, we have great companies that are going to help us with that. And we're just, like I said, blessed to be in the US and have that benefit.
No, I think that's a really important point. Whether the CHIPS Act, as written, isn't necessarily perfect, but it gets the ball rolling because we have to start educating people in a new economy that we don't do. Like literally, we need to send kids to the Colorado School of Mining because we haven't produced miners in 40 years.
Exactly.
Yeah.
And no one struggles with that. But the reality is like, I for example, some of these chips, the fancier stuff now, there's a bunch of them in layers. It's the way they package them. And some of them are on different substrates. So they're on different chemicals that they make them on. If you package them in the same facility or if you produce them in the same facility, they can contaminate the air on the other side of the facility and then you can't make anything, right? So just being like, oh, shoot, we haven't packaged that material ever in the US. Yeah, right. We need is it the most expensive thing? No, it's expensive, but it's not some crazy technology no one's figured out. It's just we need the proper air handling. It needs to be a separate building, and we need to figure out how to move those pieces from one place to another as part of a process chain. So when I say like build a cement factory, that's the kind of stuff I'm talking about. You need to.
I founded a crisis payments company, and we have to buy semiconductor chips, and there's only two warehouses that we can buy from, and they're both in Europe. They're the only ones that are able to produce exactly what we need to produce the cards that we use.
It's like I said, it's specific stuff, and I think if everyone puts their kind of, if someone wanted to tell me I wanted to build a railroad spur and a cement factory in my district, I could get my head wrapped around that. This isn't different. It's just a little fancier, right? So what parts where and what can we do well? And it's wonderful to see, like, it's wonderful to see the people. I mean, you have to understand there are people at shipping companies like UPS and FedEx and logistics companies and trucking companies that are also working on this problem. So this is a nationwide, across the private sector, everyone elevating their antenna and kind of standing up for process. And I think it's great to see private industry coming in and filling the blanks. And I have great respect for how much work it is.
We both realize from a national security standpoint, we need to produce all of the important things internally. And I think China's doing the same thing. They're exporting a lot less of the stuff because they need to consume it at home.
Right.
Sure. Yeah. So I think, that's a good. So I would look at, for China in aggregate, I would think about, hey, the index in aggregate is one thing. And maybe that makes sense, but maybe there's other industries that are going to be very well funded in this coming decade that weren't. I think, that's normal investment process, but people probably have been pencils down for a couple of years. So you got to figure that out. Yeah. I'd give it a year. I wouldn't overthink it. And then with regards to the consumer there, I think that's the one thing we're watching. Whether it's data or spending or what Alibaba says when they report, it doesn't matter. That's when I say watching, that's what I mean. It's elements where just to understand the velocity of trade and spending that's coming back just internally before you worry about anything else. And then thinking through the bigger picture stuff is kind of, always a risk, et cetera. But those are the two that I would really spend time on.
Makes sense.
Let's I have about 10 more questions, but I think for our viewers' sake, I gotta leave it there. But Brendan, maybe just quickly, what are we looking for next week? And I know we'll have a guest next week too, talking more about.
So Bob Donor is going to join us next week, and Bob was at Treasury and on the policy side, especially on trade. So I think that would be really interesting. Where Matt kind of talked to us as an investor, and then Bob's going to be able to talk about China, as a how the government is thinking about it, from a policy standpoint.
Great. Anything to look forward to in terms of next week's news?
Actually, I haven't looked. Matt, do we have any big data next week?
The PPI will be out.
And the inflation.
The inflation, the PPI inflation will be out. I think, we've talked about it very briefly here, and I'll leave, one point when folks come out, obviously, have your eye on the margins component for the companies, people in your districts, et cetera.
I think that's a really important point because companies do have a decent amount of margin that when we're talking about wages and inflation prices, companies can, eat into their margin rather than you're raising prices. And I think that's probably what's going to happen a lot. Not necessarily at the big public companies, but at the the smaller private companies throughout the
Yep. If policy folks have certain industry concentrations, the PPI does a decent job of measuring that stuff. So I like to, especially this next year, to kind of get an idea for pain on pricing, whether they can raise price, whether they can get margins. Would be, if you want to address your constituencies, just have your staff look at the PPI numbers by sector, and obviously the economic measurement folks are more than able to help with that, and absolutely would want to.
Yeah.
What the hell is going on with eggs?
That's another episode.
A whole other episode.
Matt, always a pleasure to have you on. We really appreciate it. Learned a lot today. So thank you for joining us. Right. Brendan, I appreciate it for letting me back 2 weeks in a row, but hand it off to some good hands next week, I think. But all our listeners, thank you for tuning into another episode of the Macrocast from Penta and Markets Policy Partners. Subscribe, follow us wherever you get your podcasts, and we'll be back next week with another episode.
Thank you for listening to the Macrocast. Please remember to subscribe, rate, and share.